Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Bitcoin Cash and its coin ticker BCH. None of the content is financial advice. Or the last 24 hours and 7 days on per hour heat map available on cryptoweeklies.com. Link on the bottom of your screen, available for free. The rally over the last 24 hours, again you can see over here on coin market cap, also rallied over the last 7 days from the lows of $294 now to at around $334. In terms of the heat map that is available under indicators over here, the performance of the last 24 hours, Bitcoin Cash number 2 spot, also across the last 7 days comparing against other cryptos, number 2 spot again over here at around 6% rally over the last 30 days. Most of the cryptos are down, again a couple of exceptions. Bitcoin Cash is again over here to the left. That means compared to the other cryptos to its right, it's performing decently. Again, notable mentions over here: Solana, Bitcoin, and Aptos and Tron outperforming Bitcoin Cash. Over the last 90 days also, most of the cryptos are down. Bitcoin Cash not an exception. Bitcoin Cash down by about 28%, but again within the top 10, most of the cryptos are down by almost 50 to 70% from its 90-day peak. Let's conduct machine learning based price forecast for Bitcoin Cash now. Now that we have covered some basic tokenomics, again this particular crypto, which is a hard fork of Bitcoin, shares the tokenomics of Bitcoin at around 21 million max supply. About 20 millions are in circulation, slightly less than 20 million. If we take a look at the technical analysis, the key area of support which did hold has mostly held since about the breakout in February 2024. Lot of time spent in this range essentially between $266 and about $221. The price did come crashing to at around $248 at one point, but then since then has rallied by quite a bit to now at around price is very close to the at one point was very close to the 21-week exponential moving average at around $360. The 20-week simple moving average is at around $338. So those are the two key levels to watch if the prices do manage to break out from those from those resistances, potential resistances. And then the next level to watch is at around 0.23 fib level at around $450, and that level and the 0.38 level were the two rallying points compared to from the 2021 peak to the 2022 bottom. The price barely went slightly ahead of that 0.38 fib level back in March of 2024 and has never rallied beyond this point over the course of the last 13 months or so. So the $675 level is a significant level to cross for Bitcoin Cash. Now on a shorter period time analysis, what we can see, the relationship between the price and the 20-week moving averages and 21-minute exponential moving average. The first iteration that the price tried to rally to kind of failed back in July 2024. That was quite similar to early March 2025 this time around. And now as the 20-week and the 21-week exponential moving average kind of bottoms, from that point in time, again a rally could potentially take place. Right now we are somewhere in the middle, if trying to test if the resistances kind of break and the price rallies beyond that. If we rely on the machine learning based forecast to see what can theoretically happen in the next 6 months, the 1 standard deviation bull case for Bitcoin Cash kind of coincides with that theory that the price could be somewhere between $392 and about $762. The $392 Bitcoin Cash would be at around, or BCH would be at around slightly higher valuation than the 20-week simple moving average that is coming at around $388. So that's the bull case without any euphoria in the market. If there is a euphoria in the market, the ceiling estimate for Bitcoin Cash at 2 standard deviation or 95 percentile confidence bull case where there is only a 2.5% chance that the price goes above the $2,084 level in middle of September. Again, that's the target for the next 6 months. Again, the ceiling kind of shifts as the timeline shifts. So again, the price going to $2,000 is highly unlikely for this week, but as we move further down into the into time, the 2 standard deviation ceiling and the 1 standard deviation ceiling expands at this phase of the market cycle. Again, the likelihood of a higher valuation like Bitcoin Cash enjoyed in between late April and early May of 2021, again 4 years later. Again, and the last time around this blow off top was somewhere between November and December of 2017. So again, 2025 could be somewhere close to 2017 rather than 2021. If that is the hypothesis, 6 months into the future, that covers almost till the end of September of 2025. October, November, December, again we don't release the model forecast ahead more than 6 months down the future. So if you are interested in looking at this forecast, you can check out 2 to 3 months from today on the website cryptoweeklies.com, link on the bottom of your screen. So if we consider the base case per the model, the sideways action between $330 and $360, that's the base case. If the rally, again, if the bearish trend were to continue and this support were to break to the downside, in the next 6 months, the floor for the price is between $166 and $304 per the machine learning model. Again, taking an average of all the scenarios, what seems more likely to watch for is the yellow line between $392 and $762. If that were to materialize, that in that scenario the prices would be meaningfully above the 0.38 fib level, and that holding at that level could potentially bode well as we move towards the end of the post halving year of 2025. If there were any similarities between this cycle and the 2017 cycle, most of the gains for Bitcoin Cash came somewhere close, at least the rally kind of kickstarted somewhere towards the end of October of 2017 and lasted till about the middle of December of 2017. So again, that's where we are currently kind of correlating this rally with. In terms of the regression based valuation for Bitcoin Cash, per this model, the fair value for Bitcoin Cash comes at around $840. So if the prices were to go to that level, again, this model, again, utility is in the bear market, definitely considering if you are considering any DCA, accumulating between prices between the fair value and especially below the 1 standard deviation residual applied to the fair value. Again, when the prices are beyond the 68th percentile threshold for high market cap assets, and identifying also at that point identifying the 2 standard deviation bottom makes the most amount of sense. Right now, the 2 standard deviation bottom for Bitcoin Cash, which should theoretically put some support, is at around $311. The 1 standard deviation residual comes at around $511. So that's the first rally to look for if the prices go to that $511, which is coincidentally close enough with the 0.23 fib levels. And the $840 Bitcoin Cash, if that were to materialize, that would be at around 0.5 fib level, at around $855 target on that fib level, based on the 2021 peak for Bitcoin Cash, which was not the all-time high though. In terms of the all-time high, you can see if we were to correlate the all-time highs from the 2017 cycle, the 2021 peak was slightly lower than the 0.38 fib level at around 1700. That was the fib level drawn from the 2017 peak to 2018 bottom. If we were to extrapolate this to the next cycle, the peak for Bitcoin Cash is at around 0.38 level. Again, same or similar level for 2025 would be at around $675. That would be roughly slightly higher than 2x from the current price of about $330. So that's one way to interpret the technical levels. In terms of analyzing Bitcoin Cash regression based approach, again, price color coded with respect to risk levels that are determined with respect to how the price is doing relative to the regression based value. And if the hypothesis is only to DCA when the risk levels are sufficiently low, that is less, for example, less than 20%, essentially DCing during whenever the price is close to the regression or regression line or below the line, avoiding the DCA when the price is in the mania phase. Or the opposite is, again, going further down to the risk at only to DCA when the risk is less than 10%. Again, this finds most of the historically great times to DCA. Opposite of this analysis is to when to DCA out is basically whenever the risks are more than 50%, essentially between 50% and 70%. There are no guarantees that all the rallies go beyond this 70% target. So if we have the hypothesis that the prices eventually will go somewhere between 40% and 70% target, the price at that point for Bitcoin Cash per this model could be somewhere between $1,000 and about $1,600. That's and again, the lower end of the forecast is between $1,000 and about $1,200. So this is the DCA model. Currently the risk is less than 10%, as one would imagine. Now the prices are further down compared to the fair value at around 4% risk for this model. If we were to look at some of the other indicators such as the time weighted average price, the price, again, this model does identify whenever the prices are in a mania mode. Whenever the price for Bitcoin Cash is above the time weighted average price, that's when DCing out of the asset usually makes sense. Right now the price is lower than the time weighted average price. Time weighted average price is coming close to that $420 mark. If the price were to go slightly above the $420 mark, that could come close to the rally to 0.23 fib level. Again, one area of major confluence over here per this model as well. And again, for assets such as Bitcoin Cash, again, the accumulation zone prescribed by this model is not that useful, considering that most of the time Bitcoin Cash spends below the time weighted average price. Again, applying one standard deviation residual using the regression model is a better way to position. Again, not financial advice. Again, by that what I mean is either use the model that we saw at a weekly level, or there is a bottom regression analysis over here whenever the price is, especially in the bear market, whenever the price is in bear market year. By that I mean you can the 2018s to 2022 and potentially 2026. In that year, whenever the price is below the dotted green line, again, all of these charts are developed and maintained every single day, not just for Bitcoin Cash but for hundreds of cryptos by market cap. So if you like this kind of content, you can give us a like and subscribe to stay updated on the risk based and the machine learning based journey. So coming back to the point, the dotted green line in the depths of the bear market does offer some of the best time to DCA Bitcoin Cash rather than focusing on the time weighted average price. Again, there are no guarantees that the prices go below the dotted green line every single time just because they have gone below the dotted green line historically speaking. Nonetheless, right now the prices are below that level. That level is coming in at around $383, coincides really well with the 20-week simple moving average coming in at around $388 as well. So again, a rally to that point could be a bit cumbersome for Bitcoin Cash, with that 20-week simple moving average holding a key level of resistance. So going back to the last but not the least, the simple moving average price based model, it's this model again helps identify when the rally has kind of kicked off and what risk levels for Bitcoin Cash makes sense to look for. So that per this model, and again the hypothesis being whenever the risks are between 40% and 70%, that's when DCing out of the trade, or again halting DCA makes the most amount of sense. That's per this model, whenever the risk levels are between 40% and 70%. Again, there are no guarantees that every rally goes beyond that 70% risk level. In that phase, DCAing out makes the most amount of the sense, historically speaking, with respect to this model. So if the prices were to come close to that 40% and 70% risk, to 0.4 and 0.7, that price point for that range is between $767 to about $860, between 40 and 50% risk. Between 50 and 60 is between $860 and about $950, and between $950 and about $1,045, that's the end of the risk band, between 40% and 70%. So again, looking at this projections between $770, that comes close with the and $850, that comes close to 0.5 fib level. That 0.5 fib level at around $855 represents again a midpoint of that journey at around 50% risk, at around $860 per this model. If we were to look at some of the key levels with respect to this price based estimation, again, this is quite an outlandish claim made at this stage of the bull run, where the weighted risk estimated is 9%. If let's say they go to that 40%, instead of a $3,600, you're looking at a 4x from this price, at around $330. If you multiply this by 4, you will get somewhere close to let's do it over here. 330 times 4, around 1300. My apologies, around $1,330. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.